right? Which can happen with things that are squeezed without any fundamental valuation behind it. So what I see is a risk of a gamma squeeze.
Now, what you just saw was that GameStop is at and was at a high risk for gamma squeeze. Just because we didn't see that massive rocket in the share price today doesn't mean we're not going to squeeze. Look at how much options would have expired in the money this week, with over 620,000 calls expiring out of the money. This would have caused market makers extreme pain, especially Citadel. And if you go take a look at AMC's over 480,000 call contracts expiring out of the money, instead hurting retail investors, hurting retail whales, and anybody who had call options expiring this week. Now, since it was anticipated, like usual, they decided to bring the share price down and roll to a later date when retail's not expecting it, and we saw 63% off exchange volume on AMC, which is what we're currently seeing. And we saw it get to a high of 86.35% off exchange traded volume on AMC, meaning almost 100% of the volume was routed through dark pools. And if you take a look at AMC's share price, it's basically flat on the entire month. Now, before we get into the charts, AMC is sitting at 14.98% short interest according to Ortex. Again, we just pay attention to that for the trend. We know it is much greater. Swap reporting requirements are going into effect on Monday, so hopefully you guys are watching this video when it comes out. And also, potentially contracts are being rolled. Someone's been slapping the ask on $24 calls for June 28th. All afternoon. That's back-to-back days of in-the-money call buying for next Friday's expiration, so put this on your radar as well, and this could continue to increase. Lastly, we saw CAT data from June 20th, 2024 with a 200 million error. Now, coincidentally, what was June 7th? This was the massive run-up in GameStop that made Roaring Kitty temporarily a billionaire up to $67.50. There are no coincidences here. Okay, let's jump into the charts, and if you haven't yet, like the video and make sure you're subscribed to the channel. AMC, this is the pattern that we are playing out, tracking back to 2021, and I'm going to tell you exactly where we are in the chart. This is the run up back in 2021. We are in the dead center of this red zone, this red range, right where this arrow is pointing, and AMC is coming down to test the bottom of the channel that it's in, which is exactly where we're sitting now. AMC coming down to test the bottom of the channel that we're in. And you can see a similar fractal pattern up here showing you where we're trading at right now. So this is going to potentially make one of the lowest lows that we have seen since June 10th and potentially retest that low before moving higher to the top of this range in this red zone. Now again, there's no telling how many days this is going to be because some of parts of these cycles have been shrunk. Come up to the top of the range around 560, test the middle of the range around 465 before breaking out of this channel, coming up to around 680 to 585 and then blasting higher. The time frame can change, but if you take a look, everything is playing out very similarly. Once we leave this part of the cycle is when AMC is going to get rocking. And just remember, I'm extremely bullish with a minimum price target of $17.50 going forward on AMC. As far as GameStop, we're testing the bottom of this ascending support level right here of this range. Take a look at this white arrow in the middle of this box, the same exact setup back here during the January 2021 squeeze. Everything is playing out the same. You're getting this flush down back to the bottom of this channel, which is what we're seeing right now, and you have about half of this cycle left to play through before GameStop moves higher once again. So it's pretty simple, right? Finish this zone basically flat and then begin to climb back up to the top of this range. It's pretty simple. This is what we're looking at with GameStop here. Okay, moving on to the overall market. U.S. jobless claims rise 238,000, estimated 235, and previously 243. If we take a look at the S&P 500, we called this out perfectly, expecting a little bit of a pullback on the SPY, currently trading at 544.74, down 0.4% on the day. Tested the top of the channel, along with breaking out of the top of the Bollinger Bands, anticipating weakness, breaking out of the RSI, becoming extremely overbought, coming down, basing right at the 1618 on the fib, and now it is holding strong here at 543.50, which is exactly what we called out. Just let the SPY cool down for a little bit. This may not be the top, and people may have an overreaction, and we may see a temporary flash down to 540 before moving back higher just to shake out paper hands. And this is also going to bring us into Bitcoin. Standard Chartered is launching a Bitcoin and Ethereum trading desk per Bloomberg, and a mysterious whale bought 6,070 Bitcoin for $395 million, which is going to bring us into the charts. Bitcoin is breaking under 64,000, which is a crucial support level. We have been watching this trend line that it just created, and it's breaking below. At this point, breaking under 64,000 and then under 61 is where you're going to either see this major flush down, right? You're looking for this candle to flush down to 57,500, which is something that we could definitely see because you saw that its previous support down here, okay? If Bitcoin flashes down here, expect a potential rally back up to 61.5 before selling off even further to come test around 48,000, or this could just be a shakeout. Either way, like I said before, this whole time range between the election doesn't matter to me, okay? I think this is a good time to accumulate. Nothing I say is financial advice. I'm not a financial advisor, but I think Bitcoin is going to have a rally towards the end of the year, along with other altcoins and cryptos, so on and so forth. So watch for this to fake people out, and don't be someone it fakes out. Nvidia, based on my indicator, this is something that you could see with Nvidia if it wants to continue to rally. Chances are this thing is still not out of steam. A retrace back down to around $116 to $120 before building its momentum back up all the way to 180 or 1800 if the split never happened. So just be aware of this for Nvidia. This doesn't have to happen. Again, just be very, very careful trading this thing. Tesla. We saw a bullish formation to start the week, but it just was not strong enough. And what this tells me is that now you have to sit and wait again for Tesla. Bulls aren't ready to take over. There's not enough catalyst to push this thing higher. And again, this is an interest rate sensitive stock, meaning I think it's going to wait for something the Fed will say or closer to the end of the year to get its rally, or at least just wait another month, okay? Again, that doesn't have to happen. Once we see strength, we will assume that this is going to come to the top of the range around 230. Overall, guys, enjoy your weekend. Pop in the Discord to come talk with me and the most amazing people over the weekend. Come level up your trading journey, whether you're a beginner or advanced trader. This is the place to go. We also have options trading alerts in there. I post my trades as soon as I take them. We talk stocks and crypto all day long and more. Cheapest Discord on YouTube. It's a coffee a month. Level yourself up. Stop sleeping on it. That is the third link under the video. And the second link for Moomoo, where you can get up to 15 free stocks. Do it while the weekend is here. It takes 2 minutes. You're also earning 8.1% APY with zero risk on your uninvested cash by using my link, opening a Moomoo account for a free broker, and making a deposit into there before the month of June is over. You're also getting level 2 order book data for free, access to trading options, going long, going short, and more. And the top link is my custom indicator. If you guys haven't gotten this yet to level yourself up, make sure to go get it. You don't need a mentor if you have this indicator on your charts. That is it. I love you all. Lottery Socks out.
This is the last one. We look at the slope of the line in addition to where the security is above or below. Sloping down, downwards trend, we see flattening when the trend starts to shift. That's also part of the Dow theory. We saw that here, so now this is acting as support. But what happens then is we have to overcome those series of lower lows and lower highs.
Lower lows, lower highs.
Absolutely. We're going to have you
lower
drawing
high,
on here, Tyler.
Lower high,
Perfect.
lower high, lower high.
But those become train stops. And
What? Trading stops.
Train stops. If you think about a train, they end up back.
Train stops.
They end up back at their destination, right? Which can happen with things that are squeezed without any fundamental valuation behind it. So what I see is a risk of a gamma squeeze happening with this.
Ooh, that sounds bad.
It does. With speculative excess, almost like bubble mentality. So a lot of activity really spurring buys that create artificial demand because we're looking at supply versus demand. What I need to see here, it's really the train stops are 21, 28, 40, and 48.
All right.
And then once that demand comes in, I need to watch to see if those are maintained. But again, fundamental reasoning, careful to watch.